We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Doug Casey. He's the founder of Casey Research, author of several books, including Crisis Investing, Assassin, Speculator, and also the International Man blog. He also has a YouTube channel entitled Doug Casey's Take. Thanks for joining me today, Doug.
It's a pleasure to be here with you, Tom, although thankfully I'm not in snowy Calgary where you are at the moment.
Well, I envy your position of being in the sunshine. And as you said it before we hit record here, if it gets too hot, you can just go take a dip in the pool. I can, I guess if I get too hot in the office here, I can go jump in a snowbank. But I think your position is a bit more favorable here.
Well, maybe, but I'm a fan of Wim Hof, who's the Dutch ice swimmer. So snowbank isn't bad either.
No, a little bit of cold exposure is not only good for you, but can make you feel a bit more alive, right?
That's true. Yes, it does. Not as a steady diet, but occasionally. That's right.
So, Doug, I've heard you say before that after the economy nearly collapsed in 2008, that you wondered how they will keep kicking the can down the road. So we then saw massive money creation and zero interest rates, and in some cases, even negative rates. So once they have used those tools, what can they do next? Does the Fed have any tools left at its disposal that would actually still be effective to save the markets from the next challenging situation?
Well, I was shocked with the degree of their reaction back then, and it's continued since then, since 2008. It's been the same thing every year, actually accelerating. So what have they done? To throw oil on the waters, they've printed up trillions and trillions of new currency units. And it's not just the Americans. It's most major governments in the world are doing the same thing. So that's worked out pretty good because you print up all that money. And this time it's mostly gone into the financial markets, which has given us a huge boom in stocks and bonds and real estate. But can they print up tens of trillions of dollars and get the same response at this point? I don't think so, because now it's finally, belatedly, filtered down to a retail level where, although the guys on top are making millions of dollars with higher security prices, the guys on the bottom who can't get into the stock market and the real estate market and the bond markets, they're being hit with, greatly increased gas and meat and other food and everything prices. Mm-hmm. So the little guys getting really hammered while the big guys are making even more money, turning into a sociological time bomb. So to answer the question, that's one thing that the government did, printing up all that money. Well, I'm not sure they can do that anymore. The second thing they did was take interest rates down to levels that are, they're in real terms, they're negative because actual inflation, consumer price inflation, isn't the 7% that they say. It's more like 15%. But who really knows? Because the government's reporting is about as accurate as the reporting of the Argentine government at this point. So you don't really know what it is. But I'd say it's around 15%. So can they manipulate interest rates further? Well, keeping interest rates at the low levels that they are right now, negative, that is to say, means that people don't want to save and they do want to borrow. And in fact, the world is so indebted that if people don't keep borrowing, the whole thing will go into a credit collapse, similar to, but much worse than 1929. So interest rates are going up, I think. So we're getting towards the end game here, quite frankly. And there are lots of things other than that I can mention, but there's entirely too much attention that's paid to what the government is doing and what the government should do. The answer is it shouldn't do anything. It should totally butt out of the economy. And I mean totally and absolutely. But that's out of the question. So, long answer to a simple question. Sorry, Tom.
Not a problem, Doug. It's good to get your thoughts of how you're seeing these things. And, actually looking at the painting behind you of the ducks that have painted themselves into a corner, is that how you feel about where the Fed has put itself at this point?
Yes, it is. That this print is it's called The Death of Communism, where a couple of ducks have painted themselves into a corner with red ink. And next to it, over here, is one called The Death of Capitalism, where a couple of ducks are sitting on a pile of paper money looking out to sea, where the dollar is sinking slowly into the sunset. So, but what we have in the West today is not capitalism. It's too bad we call it capitalism. It's actually, technically speaking, state corporatism, or as Mussolini called it, fascism, where you have the appurtenances of capitalism. You can buy, you can sell, you can own things, you can own stock. But the government really controls things very, very tightly. The Communist Party, which is basically a scam with 1 million people, get to stay on top. But China's not communist. They have the same type of system that we do. You can buy, sell, you can start corporations, you can start businesses, stock markets. They have all this stuff. It's all the same. It's just more authoritarian for the moment than the U.S. is or other Western countries.
So, Doug, when the next real crash in the market comes, how bad do you foresee it being? I've read that you think that this decade will likely go down in history as the Greater Depression. So, why do you call it that?
Well, because I think, based on the fundamentals, it's going to be much worse, much deeper, much longer lasting than the unpleasantness of 1929 to 1946. And the reason I say that is that the last disaster was basically caused by state intervention into the marketplace and the economy. Except now, the state is doing much more of that, much, much more than it did back in the 20s and the 30s. So if cause has effect, and it does, that's what we can expect.
It's interesting that you mention, basically the state intervention. I was just reading a book about the Great Depression the other day, and it seems that most of the interventionist policies adopted by the government throughout the Great Depression ended up serving to prolong and exacerbate the problems, like, for example, price controls and wage controls. So considering that government always needs to act to make people feel better, is this, as you're kind of alluding to, is this the reason for it, that this depression will be longer and more drawn out rather than a short and spectacular crash?
That's exactly correct. It's good to look at what happened in the economy after World War I. Now, World War I created huge distortions, huge destruction of capital, huge inflation everywhere. It was a disaster, and it was compounded by the Spanish flu in 1918, which didn't just kill old people, which is all that COVID does, and not even many of them. The average age of COVID decedents is 80, incidentally, something that's never pointed out in the media. Spanish flu was much, much more serious. So you had all these things compounded. So what did the government do to recover from World War I and the Spanish flu? It did absolutely nothing. So there was a sharp recession that took place in 1919 and 1920, and it was over, and the economy went on. Now, that's what Hoover should have done when the market collapsed, which kind of set things off, in 1929. But he did just the opposite. He had new programs and new spending. He was like a lightweight version of Roosevelt. And then Roosevelt, who few people remember this, but he actually ran against Hoover by saying, we're going to repeal all these silly things Hoover is doing. And what he did is he put it all on steroids when he was elected in 1932. But he had the good luck to be elected when the economy, despite the stupidity of the Hoover regime, when the economy was actually bottomed out and recovering. So, but then he made it worse again. So it's what most people think they know about history is usually not only incorrect, but is often the opposite of the truth. Roosevelt is painted as a hero because he stepped in and he did something. So since he's the model, that's what Biden is going to do over his remaining 3 years, I think. And it's going to make things much worse.
Mm-hmm. So when we think about trying to protect ourselves, obviously, that's why a lot of people here, we think about gold as a hedge to currency devaluation, a lot of these problems. So how are you looking at gold at the moment, Doug? You have the benefit of many decades of experience to give us some perspective on gold's behavior and price at the moment. So do you feel that it's fairly priced, or is there another area that you're focusing your attention?
Well, I think it is fairly priced at 1,800, about where it is right now. And let me tell you why I say that. I started buying gold when it was just a bit more than $35 an ounce. This was back in 1970, 71. I read Harry Brown's book, fantastic book even today, You Can Profit from the Coming Devaluation. Book is 50 years old, but it's still an excellent explanation of the way the world works and all this type of thing. So ever since then, for saving, I've been buying gold coins. Ever since it was $35, a little over $35 an ounce. Okay. And so now it's $1,800 an ounce. And actually, it's treated me very well as a savings vehicle. However, I look at the price of gold right now at $1,800, and I compare it to the price of a house or, a suit of clothes or a meal at a nice restaurant, just normal stuff. And it seems to me that gold is in line, more or less, with everything else. Okay, so that said, I'm not interested in gold as a speculation. I'm still interested in it as a store of value, okay, as a savings vehicle. Periodically, though, it's a good speculation. And actually, what I really like are gold mining stocks, which happen to be right now. I think gold is going to go up. There's going to be another panic, a mania into gold where people pile into it out of fear and greed. That's going to happen again. But still, it's just reasonably priced now. It's not like anomalously cheap anymore. But I really like gold stocks right now. They are anomalously cheap in many, many ways, certainly relative to the major stock market. They are. So that's how I'd play gold if you want to speculate indirectly through the mining stocks.
It's interesting that you mentioned 1971 and investing in gold back then. So just a quick little kind of side tangent here. My grandmother recently gave me 2 $100 bills from 1971, and she had them saved. They're brand new all this time, and gave them to me for this past Christmas. And I said, I took a real world exercise. I calculated the devaluation, and I showed her how much that money would buy, how many groceries, let's say, that money would buy now versus what it would have then. And it's devalued something like, by the official, let's say, Canadian bank stats, something like 300%. So interestingly, I said, if you would have bought gold back then, it would have been worth, like you say, $1,800 at this point, but multiply that by the $200. So it was somewhere around, let's say, $5,000 that it would have appreciated to. And, for her to see the absolute difference in cash losing that value versus gold appreciating so much, it was a really interesting exercise, and being able to show her how that the devaluation of the dollars kind of really blew her mind. Go ahead.
And of course, the Canadian dollar, because these are Canadian hundreds, right?
Mm-hmm.
Yeah. And of course, the Canadian dollar back in those days, it might have been, $1.03 or $1.04 US or something like that, because it was at a premium. Now it's about 79 cents US.
Mhm.
So that's in addition to everything else if you're Canadian.
Absolutely. But interestingly, that kind of brings me to my next point, Doug, is that I want to get your idea of what the risk of holding cash is at the moment. One thing I've been wondering about is the risk of, let's say, bank bail-ins. Do you see that as a risk in a country that has bailed out banks in the past and created trillions of dollars worth of currency to soften any blow that the financial institutions have seen?
Yeah, that's an interesting question. Because the first, well, maybe it's not the first, but it's certainly the one that I looked into most, this must have been about 5 or 6 years ago, where Cyprus, this was when Greece was in the news for being bankrupt, and Cyprus was like Greece on steroids. So I went to Cyprus to look at the economy and things on the ground and the stock market. And the Cypriot banks were bailed in. Now, what does that mean? It means that instead of the government printing up money and giving it to the big banks so that they could pay off depositors, which they couldn't do, they basically confiscated most of the deposits above the insured amount. What was the insured amount? Was it 100,000 euros? Something like that. And so people that had more than the insured amount in Cypriot banks basically lost most of what they had. And it's on the books now in the US, Canada, and a lot of countries that that's possible. And your savings, your checking account, your whatever you have at a bank, is just looked upon as another liability, like the bank's electricity bill or the bank's rent or whatever. Like it's just another liability. Mm-hmm. It's not like a sacrosanct deposit, which is what it should be. So that's entirely possible when these stupid banks, which have made all kinds of dumb loans in this bubble economy, go under. So I think it's foolish to have more than the insured amount in any financial institution. It'll be different this time. It'll be different. The government bailed out the banks the last time when it almost all went under. With who was it? It was Bear Stearns and all the rest of them. But this time it'll be a little bit different, especially since the average guy didn't get bailed out. It was the big institutions that got bailed out. I don't think they can do it politically or practically. So listen, the whole world is on the razor's edge of. It looks normal just at the moment, mm-hmm. But wait a few months before this year is over. I think we're going to see real financial and economic chaos.
So, Doug, I want to get your take on the risk of inflation eroding the value of dollars as well. If the value of the dollar keeps falling in real terms as it is now, at what point does the population and by extension the rest of the world start to lose confidence in the dollar?
Well, that's an interesting question because the major export of the United States is the dollar. People think, well, what does the U.S. export in exchange for the Mercedes and the Sonys and cocaine and other good things that foreigners send us? Well, yeah, there's some Boeings and some IBMs and some wheat, but our major export to pay for these things is U.S. dollars. Mm-hmm. The trade deficit in the U.S. right now is about $1 trillion a year. Now, that means that, well, nobody knows. I haven't seen an accurate number, but there's probably something like 20 trillion U.S. dollars that are floating around outside the U.S., and they're a debt, they're a liability. So if at some point foreigners who don't have to take U.S. dollars any more than they have to take Zambian kwaches. Actually, it's convenient to take dollars, but they don't have to. It's not the. So at some point when there's a panic and they all of a sudden start saying, God, this is a hot potato we're holding, the only place that you're certain to be able to trade those dollars in for real wealth is the US. So you could find trillions of US dollars being dumped into the US in exchange for real goods. at any time. That could happen. And that would mean that retail price inflation in the U.S. would explode overnight. It's a time bomb waiting to go off. Nobody talks about that, incidentally. And of course, if foreigners no longer want to take fiat dollars in exchange for real stuff, well, then how's the U.S. going to import all that good stuff that it's now borrowing $1 trillion a year, in effect, to do? So that's in the cards also, incidentally.
Mm-hmm. So, Doug, as the world loses confidence in the dollar, how will the advent of the central bank digital currencies affect the perception of the dollar around the world? Do you think that's going to be another death nail for the dollar?
Central bank digital currencies. Well, if you walk around, you see that people treat their smartphones like they're bodily appendages. They're always looking at the things. And you can do everything on your smartphone now. You can buy from Amazon and you can do everything on it, I guess. So the next thing is that instead of having paper in your wallet or credit cards in your wallet, it'll all be on your smartphone. But what I expect the US government to do and other governments to do is give all the citizens accounts at the central bank, the Federal Reserve, the Reserve Bank of Canada, and it'll make it easy then for the government to credit your account if they want to stimulate the economy. But then they'll know absolutely everything that you buy or sell, everything you own, with other tracking, like cameras everywhere and so forth, where you go, what you do. It's really dystopian. It's, it's horrible. There will be zero financial privacy or any kind of privacy for that matter. And it'll all center around central bank digital currencies, where you won't have paper money. If you don't have your smartphone, and if the government shuts down your account, because perhaps we're all getting a social credit system too, in the US and Canada both, like the Chinese have today, so that if you are noted to say the wrong things or hang out with the wrong people or 1,000 other things could ding your score, maybe your account will be locked down. It could be like that movie with Denzel Washington. What was that? Man on Fire, Man on the Run. Remember where he or Enemy of the State. What was that name? It starred Denzel, where he becomes declared an enemy of the state, and he can't access anything. Mm-hmm. His credit cards, none of it, and they're hunting him. So, yeah, that's where we're looking at. It's coming on soon because China and Sweden are very much moving in that direction, and so will the U.S. and Canada. It's very scary. It's very dystopian. Mm-hmm. So it's another reason to own lots of gold and silver coins in your personal possession. Mm-hmm. I think.
Trying to become your own central bank and get some of those assets out of the system and out of the control of other people, right?
Exactly correct.
Mm-hmm. So, Doug, when we think about, let's say, owning bullion, do you like to store any bullion overseas, or as you just said, do you try to keep all of it in your personal possession?
Well, you should definitely have a bunch in your personal possession. That's number one. That's like the foundation. But as risky as the financial and economic world is today, your real risks, your biggest risks, are actually political. Because as we found recently with this COVID hysteria, the government can do absolutely anything, and it probably will. So you have to diversify politically as well as diversify financially. And therefore, you should have your gold and silver stored, a lot of it, outside your home country. Now you have to be in a certain financial level to make that practical. So keeping that in mind, and everybody should try to get to that financial level. Yes, you definitely want to diversify internationally and find a safe place to store it outside. Yeah, the Cayman Islands, good choice. Singapore, good choice, and a few other countries.
Mm-hmm. So as you mentioned COVID, Doug, when we think about the effects of the last 2 years worth of lockdowns, what effect has the mass media had on the part of the population that consumes it? Is this creating a segment of the population that will think no matter what the government does, that it's for their own good and will resist any evidence to the contrary?
Yeah, I think that's definitely the case. If I've tried to figure out how many of the average population, how many people really believe the party line on COVID, and how many people think it's total crap and don't believe any of it, and how many people just don't know or don't care. Mm-hmm. And my guess is it's like 30% think it's total nonsense, 30% think it's the word of God, and 40% in between don't know or don't care. That's the way, arbitrarily, I think it breaks down. Because I really don't trust any official polls these days, because everything is so highly politicized, often subtly, just in the way the question is asked, and so many different things. So that's my guesstimate. But it's interesting, because I find that the people that don't believe the narrative that COVID is the new Black Plague and it's going to kill you if you walk anywhere without your mask, and the people that think it's total nonsense and just been blown out of all proportion. These are two psychological paradigms, and people that believe one of these two things, one believes in state control, one doesn't. One believes in collectivism, one believes in individualism. So this is, at least in the US, it's almost like laying the groundwork for a civil war, because you can't have a country where you have two or more radically antagonistic philosophical groups that don't like each other, don't trust each other, actually hate each other. Mm-hmm. And the US is no longer a country. It's turned into a multicultural domestic empire. And it shouldn't be one country anymore. And I'd say the same is true of Canada, quite frankly.
Well, I know that there are a good number of people that would agree with you in both countries here, Doug. I'd like to go back to kind of something that we mentioned earlier here, and that's your favorite places to be speculating at the moment. So you mentioned gold miners seem to be relatively cheap at the moment. Obviously, the uranium market has heated up with the advent of Sprott's SPUT vehicle. So is there a particular area or market distortion that you're favoring at the moment?
Well, I've always had a bent towards commodities, which is really kind of dumb, I've got to say to you, because the longest bear market in history has been commodities. I mean, 10,000 years ago, if you had a big piece of iron, you were like a caveman billionaire, you know. So the price of everything, all commodities, from wheat, iron, you name it, copper, everything has been going down, 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 down for 10,000 years, as best as we can tell. And I think that trend is going to stay in motion and going to accelerate over the long run. But I'm more looking at the short run. And in the short run, I mean, before we do things like have mine the asteroids and do all kinds of things technologically, nanotechnology, I think a bull market in commodities started about a year ago. And I think it's going higher. Like I said, I'm not, terribly bullish at the moment, short term on gold, but just this morning I sold a couple of gold puts. Let me see. Gold is what right now? 1720, 1820. Mm-hmm. And I sold the 1760 puts and collected $1,000 each. The odds of gold going to 1760 in between now and when they expire in about 6 weeks, I'd say it's slim. All it has to do is just stay where it is or not go down too much, and the time premium will evaporate. So that's how I'm playing commodities now. They've run up a lot. But I'm generally pretty bullish on all the commodities, agricultural commodities, metals, you name it.
Mhm.
But that's about all I'm bullish on, quite frankly. But, Marin Katusa, you know Marin, I'm sure. He recently floated a new company called Carbon Streaming, which I think the basic premise underneath it is ridiculous. I'm a large shareholder of it. I put a lot of money in it, like 7 figures. Why? Because Marin's a smart guy, and he's got a great nose for seeing which way the market's going.
Mhm.
And, this thing with carbon, which is basically, it's all nonsense and hysteria. But it doesn't matter what I think the physical, chemical realities are. I'm playing what the market's going to do. I'm trying to be like Wayne Gretzky. I want to where the puck's going, not where it is.
Mhm.
So, I engage in other things too. But commodities are basically where it's at, I think.
Mhm.
I don't want to own common stocks, just because it's in a bubble. And bonds are in a hyper bubble. I mean, they're the ultimate disaster waiting to happen. Bond market's much bigger than the stock market. And, anybody holding a bond right now, of course, there's a lot of bonds at different interest rates, is basically costing themselves 10% per year, and it's going to get worse. So when you go to sell your bonds next year, I think the question is going to be to whom,
Mhm.
I suspect. But that's just what I'm doing. In fact, I'm short bonds.
So, Doug, it seems like, in some of your explanations of what you're looking at, for example, the carbon streaming deal there, it seems that you're really trying to challenge your psychology. I've read that you think the biggest enemy we face in the markets is actually your own psychology. So can you share with us some of the ways that you've learned over the years to harness your psychology and work with it instead of it controlling you for the worse?
What's really helped? Playing poker. Don't like the people. I like a friendly, Monday night game. I like that kind of poker.
Mhm.
With table talk, you know who the guys are and all that. That's fun. It's amusing. But you can still learn a lot from it. You can learn actually a lot more at a certain point by playing poker in a casino with people you don't know who they are. And you're trying to pick up the psychology of the table, okay? Because in some ways, the markets are like a big poker game. And poker is a game of psychology, not a game of odds. It's also a game of odds, obviously, just like the market is, but it's a question of your psychology. So I don't mind running. I realize that my psychology is not the same as that of most people. Well, nobody's psychology is the same as most people's, but frankly, in fact, I found from just getting to know people that I disagree with them about most philosophical and most economic things. So I've got to be careful about that. Just because I think something and I think it's right doesn't mean that's what the vast market thinks. And the vast market is what actually sets the prices. So you got to keep your own psychology in mind and try to keep it under control. Try not to get too fearful or too greedy, and try to pay attention to what people out there are like. This is the value of listening to the mainstream media, which is basically just completely worthless, except that it's telling you what most other people think. So I guess that's kind of an answer. I don't know if that's clear enough or specific enough.
So, you've written several books here, and you keep up with the International Man blog. Why don't you tell us a little bit about what you're up to these days as you're, hanging out in beautiful Uruguay there?
Well, financially, basically, I'm just long mining stocks, commodity stocks, oil stocks. Everybody thinks that, oil is going to be banned. Coal stocks are especially interesting. I'm trying to establish positions in coal stocks right now. You can buy some coal stocks for 3-4 times earnings, big dividend yields, but institutions don't want to own them because of this ESG mania, where they can't have somebody look at their portfolio and they'll say, "What are you doing with that carbon stock, coal? I mean, get rid of that. That's worse than owning an arms manufacturer," or something like that in these people's minds. Having nothing wrong with arms manufacturing, incidentally, sometimes. But I'm trying to buy things like coal, oil, gold, silver, other commodities, copper, trying to get short, not yet, but maybe Tuesday morning, get short S&P 500 kind of stocks. It's risky because it's like standing in front of a freight train. Is it going to stop now, or is it going to run you over? Mm-hmm. Well, it's still barreling along, but I think that market's topping.
Why specifically Tuesday morning?
Oh, well, Monday morning, you may be unaware of this, but it's Martin Luther King Day. Mm-hmm. And in case you're unaware of it, February is Black History Month. I suspect if a lot of blacks find out that it is Black History Month, they're going to complain about the fact that it's the shortest month of the year, because everything is racialized today as well. Yeah, part of the identity politics game, which is being played everywhere. Very, very destructive and stupid and negative. Other than that, I like to read books. Some very interesting stuff on YouTube that I like to watch. But I don't know, stay in shape. And most importantly, one nice thing about being in the middle of nowhere, which Uruguay kind of is that anything happens, I'm going to watch it on my widescreen, not out my front window, which could be inconvenient and unpleasant if you're in a major city.
Mm-hmm. Are you continuing to make videos for your YouTube channel and finishing up your next book?
Yeah, Matt Smith and I generally do a new posting every week, sometimes 2 a week, and people like them. So go to Doug Casey's Take on YouTube, and I write a weekly article for internationalman.com, which is usually very contrary and politically incorrect. And hopefully by the end of 2022, John Hunt and I will finish the 4th book in our Charles Knight series, because I find that you can say a lot of things in the form of fiction that you really, in today's environment, had better not say in the form of nonfiction. So I suggest people go on Amazon and get a copy of Speculator, which is about mining and a mining fraud and a bush war in Africa. It's a pretty good book. And then get a copy of Drug Lord, which is when our hero Charles Knight gets into the drug business. And although he makes a couple $100 million, gets put in jail for a couple of years, which leads us to the 3rd book, Assassin, where it's a defense or an examination of the morality of political assassination and the techniques and the rights and the wrongs and the history of it. It's a really interesting book. And the next one's going to be Terrorist, where our friend Charles is accused of being a terrorist. And I have a lot of views on terrorism as a method of warfare. But that'll be the end of the year when that book comes out, with a little bit of luck.
Excellent, Doug. Is there anything else you'd like to share with our audience before we wrap up here?
Can't think of anything, Tom. You've really covered the waterfront.
Perfect. Well, I really appreciate your time today, Doug, and always great to have you back.
Well, we'll do this again sometime, I hope.
Absolutely. Looking forward to it, Doug. Thank you. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.